Ooh, that's a big picture. Um, Hi everyone. Let me make sure that we are here together. Market kickoff. I'm gonna go get the, wow, that's a big picture. Um, I'm gonna go get the, ooh, here we go. Let me make sure that volume is off, but that I can.
When the Romans officially pulled out of Britain.
Yep, that's not it. Me and my historyness. Okay. I'm glad you're here. Oh, there we go. All right. Hey, welcome to Market Kickoff. I don't know how to invite Jay, but here we go. Let's go to our screen. Exit. Click to exit full screen. All right. And now let's put our screen capture up. And let's see if that's right. Whoopsie. Let's get me out of here. And let's get that out of here. I appreciate you guys. Let's see what's happening here. Now I did that just 2 seconds ago. So let's try another screen event. Let's move this image off. Oh, ta-da! Here we are. So, welcome to Market Kickoff. There we go. Thanks so much. You know what? My account did not get hacked. It did not. But let's see if I can make this screen a little bit bigger. Let's try this. No, I can't. Here we go. Let's try this. Nope, not let me do that. Now you can see all my up there. I'll figure this out. You know, not really that smart about tech things. It's not letting me. Ah, there we go. Okay, here we are. So tonight, oh wait, I gotta get my face in there for you guys to see me. There we go. Ta-da! Here we are, right here. Yeah. So a lot of things have been going on, right? We have a lot of noise in the market, and so my goal is sort of to trim down the noise, to thank each of you for coming, because you know time is the only thing that we spend that we have no way of getting back, right? Let me refresh this because I have made some changes. Yes. So first thing we want to do is, as we're talking about the ES, we've got a number of things going on this week. It's more of a news heavy week across the pond. And so currencies could have a little bit of an impact on what we're doing. We also want to watch the yields, and as those potentially rise, maybe the bonds don't fall the way a lot of, the bonds don't rise the way a lot of people have been expecting that to happen. So we have a little bit of noise there. On Tuesday, the Germans, who really have got they used to be the powerhouse of Europe. Now they're not anymore. And I think I can see better without my glasses today. How bizarre is that? They have a bond auction for 5 year, which of course we know these near-term rates have become very, very important. That's on Tuesday at 5:30 a.m. Eastern. Now, if those of you watch with Deanna or Aaron in the early part of the morning, you want to be careful on Tuesday morning. So when you listen to the the market kickoff, you really want to take that space of saying, hey, let me see what else is going on and let me put these big levels down. So one of the first things I want us to do is take a look at the monthly in the ES, and easily from a monthly perspective, I know some of us that are intraday traders, we might be saying, whatever, lady, what do I need to look at a monthly chart for? Well, it gives us rhythm and flow, and it also tells us a little bit about what's been happening from a big picture perspective. So easy, we've got a 20 simple moving average. This little red line right here is the VWAP. We can only see it much better on the daily. And so what we noticed is 2 months ago, we had March, which was kind of yucky, April, which was horrific to start with, and then turned around and recovered dramatically. And from then, what we've been trying to do is really get to the top of this candlestick formation. Those of you who maybe remember Rob Smith when he was with us, he's no longer with us, he would talk about the recovery through price action. And this is what we're doing. So this week, we've got a little bit of a do or die for the buyers, because if we get up over the top of this candlestick for the week of March the 3rd, the month, March the 3rd, beginning there, the high is 60.52. And wouldn't you know it, that's the daily expected move from the implied volatility chains. Okay, so that's the first thing. Dips remain buy zones, but we've got a do or die here. So the expectation is that traders will continue to buy the dip. The bottom of the expected move is somewhere around 59.70-ish. We'll look at that a little bit more closely. But we can see this big chop for 1, 2, 3, 4, almost 5 months, we're back inside of it. So easily, folks, we could keep climbing the wall of worry. And the more people that pile in short because of the doomsdayers that are saying, listen, it's going to happen tomorrow, or whenever they think it's going to happen, people get in front of that too early. We just need to pay attention to price. So the great thing about these levels that I'm going to put up for you, you can write them down. They work for the ES and the MES. Here's what I expect for the week in terms of what the traders are saying. Now, let's go to the weekly, and we can see that this is a zigzag pattern. This is a swing high to a swing low, and we have recovered a lot of it. Theory says that if we recover more than 60% of it, the golden ratio, 61.8, we have a tendency to try to get to the top. So there's a lot of stuff showing, hey, we could have upside pressure this week. Market's going to open in about 6 minutes, but we'll continue on. And as the time runs on, we'll watch to see how the move's set up. So fairly bullish. We are above a 20 simple moving average. Our momentum indicators underneath this line here, I'm going to turn it to a different color. How about I make it, let's make it that color. Yeah, make it a little bit thicker. And we'll also make that one underneath that color. Make it a little thicker. And so we know, hey, I need to keep my eyes on this. Trend is up. Easily it's telling us from a weekly perspective, dips or buy zones. Absolutely. Coming into the daily, look at the time that we've spent in this sideways motion. And for the first time on Friday, we broke completely out of this range. So remember, price action accumulates and then distributes at a premium or distributes at a discount. That's all they do. They collect prices in here, inventory accumulation. This looks to me like distribution to the upside. And so what we're staring down is a region where easily dips are buy zones. Now, I don't know what the futures are telling us right this second, but does it look like I'm in the dark? How about that? I'm blind now, but there we go. I'm not in the dark anymore. So that's what we're staring down. Many of you know that I like to look at the hourly opening candlestick of the day. And so the way I will set it up, now we won't finish an hour here, but I want to show you again how I set it up. I go for the range, I go to high to low, and I will normally move my target area into prior congestion. All right, so prior high all the way up here, it certainly did that into the week, but this one I'm going to end up moving over. So for the next one, the short position, we'll do the same thing. Always the range and the target, or what my eyeballs can tell me, are relative support. Okay, now that's what we did on Friday. You can see that that works really nicely once you get out of the range of that open candle and it holds the edge. You've got upside pressure. Very nice move. I like to frame out all my trades from that Globex open. Now, as I mentioned, the old school guys and gals will say, "What are you doing, lady? There's no volume there. How can you do that?" You know, it works. I don't know why it works, but it does. And so I'm going to keep it and use it. What we can see is that if I anchor my VWAP at the highest volume candlestick over the last couple of days, it looks like price action is pretty bullish. You can see Friday, they're all pretty much in the range in terms of who's the highest. So I'm going to leave this one here that tells us, okay, that's what we're staring down. All right, so I don't know if the market's going to gap up or not, but we're going to go ahead and I want you to see the moves, take them down because they work very, very well. This week, I believe we could easily expand out of our weekly expected moves. There could be a lot of wonky things happening in currencies. I don't want to go into that, it's boring, but we're going to keep our eyes over this edge, and if they blow out of the top, do not try to short it up here. Just let it frame out on your 5-minute and take it in the direction of trend. And only when it breaks down can you go, all right, I need to see a failed breakdown, and we'll see how it works. As it looks to me, the opening range should give us a dip that allows us to buy. So that being said, that's what we've got. Upper weekly expected move, 6,096. Lower weekly expected move, 5,924. Again, what that tells us is the range that the week ought to move. For the day, they've got it at 5,974 on the downside and 6,052 on the upside. Here's the great thing. You can put these, and they can also work for the MES. Don't need to do anything. There's our opening space. If you said, hey, listen, I'm taking a long right here, which you could take a long right here, your stop would need to be at 6,002. My thought is let them wiggle it out, but this clearly looks like upside. Anchored VWAP up, and then the regular VWAP also up, trend up. Momentum is cresting very nicely. It's in the area people called overbought, but that just means the trend is strong. And that's really all we need to think about. If we start stalling out at the high of the prior day, you probably want to take some profit. I don't normally take trades right at the open like that. It's just not my game, but you certainly could. And your stop is right underneath at 6,002. If you go hammery, that's 12 ES points. No, thank you. You could try an MES. Or you could be like me and you can wait for the bottom of the range to go long. Okay? All right, let's take a look at the NQ. And I'll stop after the NQ and check out the questions. How do you calculate the weekly and daily range? That comes from the implied volatility in an options chain. So you could go to the Chicago, no, let's see, you know what? TrendSpider has implied vol moves. If you have another platform that you trade options on or other things on, you can get that implied volatility move from there. There are also some special add-ons that you can look to. MentorQ is, of course, my favorite. I like those add-ons, and they tell me where call resistance and put resistance are sitting. And that's really what this tells us. All right, so now we're looking at the NQ. I'm going to change the color of this. I did it on one of my other screens and it forgot. So here we go. All right, the goal is to see where the highest volume has been over the last few days. It is this bearish candlestick right here in the NQ. What I like to do, because I'm very visual, is I like to draw a box. And so I will use a GAN box, and I'll put a box around this framework, right? And it gives me, whoops, it gives me a relative frame of motion that tells me, you know what? We had a lot of sellers here. They were caught flat-footed when it broke out above this area, and they had to buy to cover. Now, if they're trying to get back into that range and they're going to be stopped by buyers, that's going to be the floor of support. The weekly expected moves in the NQ, look at how close they are to this edge. I feel like this is very undersized. They're only expecting 300 points on the whole week, and we have been doing quite a bit more. Wow, this did not save. Shucks. This did not save for my other formations. Hang on 2 secs. I did the work on another screen, and when I logged back in, it forgot my levels. All right, so as I go to the implied vol, they're asking for, that's 180. 180 from, that's 2.9. I'll put these numbers up for us afterwards, folks. And to the bottom side, I think it's 21 and some 21.4 and some change. Yeah, right here. Our daily expected move here takes us to 920. Yeah, right up at the top. Sorry, this one is 21,960. Oh, I hope that this doesn't. Maybe I forgot to save before I close that other one. Oh dear. All right, so that's what we're looking at for these edges. Trend up, momentum up, everything says buy the dip. It doesn't mean buy the number, it just means buy the dip. So you look to the left to see where these motions are, and then you get yourself off to the races. Let's go backwards in time though, and let's take a look at the month. And what we can see is the same sort of thing. This is a zigzag pattern, right? And we've got very big volume. Look at where my box is. The highest volume is that negative candlestick in October of 2023, 2 years. And we came back and tested it in April 2025. This is one of the reasons it's super important to go backwards in time to see where the biggest volume spaces were. Just like that, the new biggest volume from the upside is this following candlestick, and it's been a reversal, and it should, using swing high, swing low mechanics, yeah, that's right, come to the top of this box. Man, am I annoyed about this. Okay, so let's have a look at what we're staring down. A lot of price action, trend up on the monthly, momentum up. Trend sideways on the weekly, momentum up. Okay, so the sideways motion on the weekly tells us we've had a range that we're trying to resolve out of. One of the biggest things that you can do when you're studying and getting yourself ready to trade is to remember this. It's not a matter of, hey, I'm going to buy over this moving average, or hey, I'm going to sell below this price. It's to look at everything and say, what are these traders doing here? What are they doing? And you can see that they've been in a battleground since they broke out in November of 23 to where we sit now. That is a massive range. Now we're getting to the top of it, and it's going to be a do or die. Absolutely. This week could be very big. It really could be very, very big. Could be a very big week, folks. All right. So let me get these actual numbers. I'm going to get a calculator out here. Oh, I hate doing this. I hate it that I didn't save it on the other machine. I was sitting down working all the levels out before we got together, and of course I didn't save it, but that's me. 2185 plus 2990. Okay, 219. All right. If I'm a betting man, I'm going to bet that we blow out of these levels this week. Why? I think they're too narrow for relative price action. I really do. I think they are way too narrow this week. 21889. All right. For the week, we are looking at 420 points. They've got a little bit of volatility expansion since Friday. Four. All right. So let's take a look. Let's go to the hourly, see what's happening. A lot of dancing around, folks. You know, here's something else I want to give you as a tip for the week. A lot of times when we're intraday traders, we say to ourselves, listen, I just want to get involved. I'll add in if my position goes in the right direction, or even if it doesn't go, but it doesn't break my stop, and I'll just add into the position. That's usually bad because we don't have an ideal framework of what's going to happen. So here's the storyboard. Up above 21,880 today, traders have not been buying anything, right? From Friday. Underneath 21,117, they haven't been selling anything. So the question is, in this space, shouldn't you wait for the floor to be tested so your risk is the least and your reward is the most? The answer is yes. But then our brain goes, yeah, but what if it's going crazy? So let me show you how a stock looks when it's going crazy. First of all, if you're staring down, let's choose this day. Super important. Let's say you're staring down this morning and you're like, oh my gosh, I want to get involved. The big thing to stare down is, where is my, why are these, this is so crazy. Okay. Let's do an anchored VWAP from the high on this day. And you're staring down to yourself, listen, this looks like a great short, whatever it is that you're thinking, or you think it's a great long, whichever one you're going after. When a chart takes off, notice, we lose the front line of resistance here, front line support, old support, new resistance. We break down. I went to the anchor of the highest volume candlestick of the days prior. It comes into that area, begins to flatten, and then it takes off. If your moving average is, if your VWAP gets really steep and your anchored VWAP gets really steep, absolutely buy the first little pullback that you see. But if you're staring down something that looks like this, there's no steepness on the VWAP. The 20 is steep, but it's really far away. And although you've got very positive momentum, it's not moving faster. So these are the types of areas where you can say to yourself, you know what? I'm going to wait on this one. I'm going to wait until it comes back into my level, and I'm going to take it long because it's going to give me the least risk. You can always tell how price action is moving based on what your VWAP looks like, right? So if you're staring this down and you go, ooh, I want to go short, and you lose this level and you're under the VWAP and the VWAP is very steep, you know that you can get in and go, you know what? I'm going to wait for the bounce. I'm underneath the momentum of trend. It's slipping over. My momentum is very low. I know I've got a shot at formations that allow me to come into support to buy the dip. Okay? If you are the person that goes, hey, I want to take a short from mean reversion, your stop here would be 21,826 into that floor. I wouldn't take that trade. Why? Because I want to trade with trend. I'm not interested in trading against trend right now. If it loses everything and I could have had 100 points, oh well. You know what? The market's a buffet. It's open all the time. I can get whatever I want. And like I always say, I'm not looking for a green bean and grape jelly sandwich on white bread, right? Or something horrible. I'm not going to look for that. I'm going to look for something that's appealing to me that sits in my reference. So that's what we're staring down there. Let's go to the YM. Let's take a look at the monthly here. So we've got a monthly formation that really tells us, let me go over here, because note to self, work on the screen that you're going to present with. All right, the vol, they are looking in 12 days, they're looking for 833 points from, what was our open? 82643, okay. All right, so they are looking for about 43,700 to the upside. That's not really that far away at all, to be honest. Not at all. And 40,900 and so. All right, so that's the range. They don't trade options every day in here. And so we can look at the weekly. Look at how strong this trend is. Just came in and tested the 20. Momentum is drifting a little bit, but that only tells us, listen, this chart has been looking for support. The highest volume event was a bearish candlestick that occurred in April. It did not close positive like the other candlesticks did. From the weekly perspective, super sideways, just like the others. Largest volume candlestick on April the 7th. So we're well up over that edge. Swing high to swing low. We're well up over the 50% area. Dips are buys. Dips are buy zones as the price action sits right now. The question might be the following. Okay, Marie, you're telling me it's buy zone, everything's a buy zone. When's it turn into a sell zone? That is a fantastic question. Until we break the floors of support and old resistance becomes new resistance again, dips or buy zones. So literally we can move down, what is that? Almost 1,000 points in terms of the YM before this daily formation breaks. Now, you might say, Anne-Marie, how about I look at broken resistance, just like you talked about a minute ago. Here's resistance, broke above it, and then failed. Short right here. Here's resistance, broke above it, and then failed. Short right here, but trend says that if you want to short that, you better be prepared to buy it back, because this sharp upward trend is telling us they are buying the dips. They are absolutely buying the dips. All right, let's go to the hourly chart here. Is that an inverted head and shoulders pattern? Could be. Could be. I don't really trade those, but I mean, if it were, that is a massive neckline. It is 3, 4, 7,000 points. That's 7? Yeah, that's insane. That's insane if that breaks to the upside. So there we go. Pullbacks or buy zones here. Let's go to the 1 hour. Remember, we frame out the trades exactly the same way every time, every day. The only thing that's different is the market itself. Look at this range. Very sideways. If you are newer and you find yourself in the boom and bust pattern, where you do great on a combine for 3 or 4 days, you pass it, you get to an XFA, and you blow it out. Here's a common thing. We always say to ourselves, you know, I was probably oversized when we go upside down. When it goes in our favor, we don't think a single thing about being outsized. Here's the thing. If you're in boom and bust, 2 things are happening, more than likely. 1, you size up too fast, or 2, you expand your risk too fast. Those are the only 2 things. Now, it could be a head game, it could be XYZ, it could be anything, right? It could be absolutely anything, but instead, what it is simply is, you know,
The market is open.
I don't know how to do anything except size up so much that I blow my account. All right? So do yourself a favor. If you're in the boom and bust and you go, I got to figure this out, stop looking at the dollar amount you're making and start looking at the patterns that behave. So sideways, last time we were here, it sold off, right? Last time we were here, momentum was really high. Moving average was really nearby. So could be the same kind of pattern. My thought is the dips are going to be buy zones because there are so many voices out there that are telling us the sky is falling, that big money continues to sit in the wrong direction. And they have to come in and buy the dip, right? They have to buy the dip. Now they're behind the curve and they really want things to go in their favor. And so they're going to chase the market higher. This is my thought. So dips become buy zones. We have a high, a low, and our first lower high. So what are we doing? Potential mean reversion. So take a look. This is Friday's highest volume candlestick. Draw a box around it. Use a GAN box. You're halfway between it. Ideally, since it was a bullish candle and price action is up and momentum is high, the dip area to actually buy is 42,660, right? That's going to be that dip motion, old resistance, new support, retest of support. Listen, if it's wrong, you give yourself about 50 ticks and then you get out. No matter how much or how hard you try to work on getting a trade exactly right, losing is part of the game. So stop fretting about losing and just saying to yourself, okay, where can I manage my risk so that if I lose a little, but if it goes my way, I can make a lot more. And this is my favorite way to do it. Now, underneath that area is a very big selling candle from Thursday, which could also give us a frame of reference in this zone. Okay? If you're the type to go, hey, I just want to short this, just remember this chart is very likely in mean reversion, going to the old regions that people really started buying. This is an area of inventory accumulation. It's inside of this box. So they're going to buy the dip and sell the bounce until it breaks. And then they're going to have inventory distribution. Let's take a look at micro Bitcoin. Love trading this one. Whoa. Daggone it, did the same thing to me here. Let's take a look at this. Let me go over here and do... Okay. So Bitcoin should be in pretty big bounce. Let's take a look at the monthlies here, right? This chart had a savage upside candlestick that went from 73 and some change. I thought we would go back to 68, 60. It took off at 73 and went all the way to 105, right? Gigantic. And then what did they do? Inventory accumulation. Up, down, inside. Now they're getting close to the top of that box. So if they get out here, everybody that was short at 105 is going to have to run for the hills. And so we're going to have a distribution at a markup or a distribution at a profit, right? So let's see. Let me get my micro Bitcoin numbers out here because I've got them calculated on another chart as well. My apologies. Okay, 108,900. 108.9. Okay, so that's the top of the weekly move right there. That's bananas. 102,265. 102, 102.70, and then our dailies are 102.7. Oops. Excuse me. Let's see. 101,265. Not 2. 101,265. And then 102,750. All right. These are the roundabout numbers. Our upper expected move is 107.2. And we are sitting very close to that number, right? Very, very close to that number. Again, I think the traders are underestimating this motion here, as they have in many times past. So you could see a big burst of upside if it breaks this 107 300 area, right? Let's go to the daily. You can see, notice, sideways action right here, sideways action right here. Listen, the markets are a really fat, hot mess right now. Truly, they're a mess. So what we have to stare down is what the price action is telling us here. So we had a gap, right? What's the trend? Always the same, right? First, we look for the high volume candlesticks of the prior day. These two are right together. I think that I want to choose both of them, right? Gives me a bottom. So that's the biggest downside move. I've got an anchored VWAP from there already. And so this tells me, what do I want to watch for? Well, I'd like to see the gap fill. I really, really would. The next big candle move is way up here where it's sitting right now. Look at that. Wouldn't you know it? Gotta tell you, these hourly formations are just golden. So let's look at this. This is a bit of a doji. Look at that. All right, all the way from over here. That is where we're sitting. It is right at the open of that candlestick. Now, my supposition is that, and I'm going to delete this anchored VWAP from here. That's one of last week's images. My supposition is the following. If we break up over the high of this candlestick at 106,970, so if we break 107, we should move to 109. We should move to 109. If we do not, we know that's a big volume candle from times past. We are likely to fill the gap, and the buying event could be at 103. Now, notice this. This zigzag pattern is bearish. Could it be turning around right here? Yes. But the first pass in my mind is negative pressure that sends us somewhere into and close to the VWAP. So I am going to be looking for buying pressure around 103, right? I'm going to wait. I'm going to leave that all night long. See if it comes back and gets me. If it doesn't, I'll set up another trade. If it does come back and get me, my stop probably going to be about 500 ticks. Not too bad. Could it hold the floor? I expect it to. If this chart does not hold 101, we are in trouble, fellow Bitcoiners, because this has literally got nothing to stop it until we head back to heavy congestion around 97,000. So that's my setup. I'm looking for that. If it doesn't come, could I do a buy stop up here? I could, but I don't know that I want to. All right, what time is it? I just get chit-chatting and not even looking at the... Listen, my fellow top steppers that are here supporting me, you guys in the blue markers, I love you. I'm so appreciative for you. I can't even tell you. I appreciate you. I really, really do. All right, let's take a look at oil. I don't know if some of you guys are being sassy over there or what, but seeing some folks getting timed out all over the place. Be nice. Be nice. It's not hard. You can be nice. Okay. Oh, for goodness sakes. So 65.50 is the move that the oil sector is going to be looking at in the following week. I suspect, no, that's not it. It's 66.70, 78 now. All right, 66.78. Oh, look at that. It's about a measured move. That's fantastic. All right, the low of the week, 62.72. The daily expected move, 65.50. On the upside and on the downside, 63.70. All right. So take a look at what's going on with this chart, though. Over the last month, on a monthly chart, look at this noise, right? I mean, just a hodgepodge of absolute dumpster fire garbage. Terrible. It's been terrible in terms of formation. The zigzag pattern is literally that. It looks like a sawtooth all the way across. We are still caught in this very negative pressure event. Moving average generally drifting down. Momentum has started turning up, and so price action looking for resistance one more time. I don't think we have a breakaway in this chart until we get above 75, and I really don't see that unless something really dramatic happens across price points. Okay, from a daily perspective, low, higher low, another higher low. High, retest of the high, break above the high. This to me is a breakout formation that's going to give us bullish action for the week. So let's take a peek at the hourly chart. It's opening right at the edge. There's no gaps. Look at this. Inventory accumulation, distribution. This makes me crazy. Distribution. And so what do we need to think about this? Pullbacks or buy zones. Anne-Marie, why can't I just buy the breakout? Slope is up. Momentum is up. Trend is great. Yes, all of those are true. You could buy this. But at what risk? Hey, I just want to make a few points and then get out and try it again. Okay, at what risk? Why not say to yourself, hey, trend is up. This is inventory correction. Accumulation. Distribution. Why don't I just wait here at the top of the box? That's going to be me. I'm going to wait for the retest of this coming into the moving average. I've got a series of higher lows. I want to be in the best place so I have the least amount of heartburn. Okay, Friday's motion is this big candlestick. Literally, we're above it right now, right? Below it, that's going to be where my stop is, right? Frankly, maybe I add here also. Right here at the base of the expected move? Yes, I shall do that. All right, and tomorrow morning, we'll see how these go. Okay, now what I want to do, let me get to some questions. Ask me, do I ever use fair value gaps for risk? No, I don't. I'm a bit of a simpleton. I truly am. I don't. I don't. Should I? I don't know how to incorporate them in what it is that I optimally use. You know what I mean? So let's see what else we have. I see you in every stream. Do you ever get rest? You know what? I feel the same way. Coop is just always on call for everybody. He is just absolutely incredible. Okay, let's see if we have any questions here. If we keep above 21,700 on the NAS, it's a breakout to the long side. Wait patiently, can't enter the trade. I'm not inclined to disagree with you. I truly am not. What what indicators do you primarily use? A moving average. Here it is. It's a 20. Not fancy, right? 20. I use the VWAP. Volume, I use, what's this called again? I use an RSI. Sometimes I'll use stochastic momentum index. And I use a percent R, Williams percent R. And those things sort of tell me what's going on. Is gold along here? It's a reflexive bounce, that's for sure, right? The VWAP of this very high negative volume candlestick, somebody just said go long in gold, it's right at resistance. So here's what we know. Over the weekend, the big story on Bloomberg is China continues to buy gold, right? So we know all the central banks continue to buy gold because they print money by loaning it out. They don't really print money. Money is created out of thin air when you go to borrow. Let's say you want to go buy a house. Let's say that house is, I don't know, 350,000. I pick a number, right? And so you've got your 25% down. You go to get your loan. It's not like they go in the back and pull out the rest of the money. They literally print it into existence and they go, all right, there's a loan on our books. And over time, you're going to pay us. And that money just goes poof. And now it's money in the system. They don't actually run a printing press. They make loans. And those loans are what's evaporated out of nothing, right? They use collateral, they use house collateral, but the actual money event comes from this, I think the fancy word is fractionalization, but that's how they make money. Anyways, Anne-Marie, what was your background? Okay, so somebody says, hey, what was your background? Listen, I love that you asked that question. In the very beginning, I was a mathematician by trade. I taught statistics at the college level, and then I was in the middle of getting my master's, and then I became a neuroscience researcher because I got tired of studying and I wanted to do something amazing, and I thought neuroscience research was great. And I did that for a while and decided I didn't want to eat ramen noodles for the rest of my life because I read somewhere you could die from eating too many ramen noodles. And so I went to a recruiting firm. A gal hired me and she said, all right, we'll recruit technical people like you. And I have a hard time not pushing myself to the next level. So I started a recruiting firm. I ran it for 14 years and I found trading. And I found trading. I was really fortunate. I had worked very hard, always lived below my means. I still do today. I live well below my means. And I ended up with a nice chunk of change. And I said, you know what? I think I'm going to try the stock market thing. And let me tell you, you want to talk about somebody that lost millions of dollars. It's very traumatic, my early years. Super, super traumatic. It's one of the reasons that I think I make a good educator is because I know all the pitfalls of psyche, and I've ran them a lot. And, through my time, I've been trading about almost 25 years. And my goal was, listen, always do the best you can, always do the right thing, even if it hurts, and learn every day from no matter what. And that allowed me to meet some like-minded, wonderful people. And I met Eddie Horn, and then I met John Hoagland, and then actually met Michael years and years ago, 2011. And, I've just always been on the periphery, and now I get a chance to share with so many folks doing all kinds of things. It's fantastic for me. I absolutely love it. It's truly the culmination of everything that I've ever studied. It's got the analytics of the math that I love. I'm just an absolute geek. Um, it has all of the psychology of how people make decisions. And I have to tell you, in the recruiting business, that was the biggest lesson that I learned, to understand how people make decisions and to make sure that I could put the right opportunities in front of them. And it's just culminated in this work. And, super excited about the Topstep VIP team coming next. I'm going to try and share a ton of stuff on the Coach Anne-Marie channel as well. And yeah, my goal is to share everything I've got. You can take it and go, that's crap, I'm not using it. Or you can take it and go, I kind of like that, but I think I want to change it this way. That's great for me. Everybody's individual. You got to find your own path, but you've got to find a path that makes sense. And that path that makes sense has got to be around risk. We're in clear, risk defined opportunities at Topstep, and that is something super important for us to remember. Thank you, thank you, thank you. Oh, well, thank you. Yes. How did I meet? How did I meet my husband? Okay, that's hilarious. On the internet. I met him on the internet. Now, I was an executive recruiter at the time, and so that's how I met him on the internet. But yes, I like to tell people that because, it's just something funny, especially people my age, right? If I'm 60 years old and somebody goes, "Hey, how'd you meet your husband?" I met him on the internet. So, and we've been together for a quarter of a century. It's been up and down. Marriage is hard. It is. A lot of compromise, a lot of trying to understand a person's feelings. But if you always put that person in front of yourself and you've chosen to marry a good person, it's always going to come back. Truly. It absolutely is. It's truly the most important decision that you'll make in your life. Your other half that you choose to walk in the world with. And as a comedian I listened to the other night said, and you really need to choose wisely, because who wants to give up half their stuff? So that being said, he does long-term investments. He does trade on the option side with me. So yeah, we have a lot of fun. We bump heads a lot. We are both super strong, really in your face people, with each other. But we have a deep respect and love for each other, so it works out. Doesn't mean that I don't want to bury his head under a pillow sometimes, but he could say the same for me. That's true. That's absolutely true, Larry. It is just God being the center of your life is number one, because If your spouse isn't really doing 100% and you're like, man, I sure do wish they would, well, you give it up to the Lord. And he goes, I'll take care of it. And if you trust and believe, he does. He does. Oh, I appreciate that. Yes, we are very, very competitive. And not in a destructive kind of way, but we certainly are competitive. Like we can't play video games together anymore. We used to play Madden together all the time. And then one time, some guy was playing, he just kept running against me, and I had so many touchdowns. And he looked at me and he went, the player's name was Frank something. He went, Frank's having a good day. And I threw the controller at him, and that was like 12 years ago. I never picked it up to play with him again. I'm like, I'm done. We are not playing Madden anymore. So now I just watch. Oh, all right. Thank you guys. What great feedback. What great feedback. Absolutely. Yeah, I used to be a fiery one. I used to throw my mice out of my mouse, my mices. I'd throw them out. My office used to have these double doors into the outside of the house. I'd get so mad. I'd throw all kinds of things out there. I had to learn to get my temper in check. And I had to learn to put my ego in the drawer. That's the thing about trading. You gotta get your ego in check. So, for the person who said, hey, I'm thinking about long gold, take a look at why it's important to stare down the largest volume candlestick of the prior day and relate it back to trend. Do you see how many times we can look at something and go, that looks like support. I think I'm going to buy it. But here's the golden rule. Unless you change trend, what's happening in this motion will continue. So for instance, what are we making? High, low, lower high, lower low, lower high, higher low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low. But if you took the breakout and you failed to see, wait a second, Friday, I had a ton of sellers come right in at 33.38. I don't want to go long around there. I need to wait for the price action to carve out. I promise, if you just try this one thing this week, say to yourself, I'm going to think through just one more of my trades than I normally do. Instead of going, oh, gold, up, long. Listen, you could be right. But the question is, what's your risk? What's your risk? If momentum in the percent R stays way down here, my friends, we are headed lower. It is my supposition that gold really needs to take a breath. It had a great big move up, and ever since then, it's been trying to hold. Notice the zigzag pattern says it's in an uptrend. So it is looking for the floor of support. You could draw yourself a nice little trend line. Can I tell you, I suck so bad at these. Oh, I suck so bad. But if I drew a trend line here, I would go, that's broken. And so I would need to get back above that line before I took a long here. Otherwise, I'm just going to walk through the formations, because look at the selling volume from the last couple of trading days. Much higher. And so to me, this says the traders are trying to find a better area of frontline support, right? If we go to the daily, we can see that this is even wider pattern. It could still be a bounce zone right around here, right? But let it come down and tell you that people have stopped heading lower. And that's how you know that you're taking the time to get to a trade. Last thing I want to share with you is listen, I used to trade a lot. I mean, 200 trades a day. But see, I can't journal 200 trades a day. So now I do 5. And if I do 5 and I let them work themselves out, I get to learn the lesson after each trade. Because see, the market's going to teach you a lesson every time you get in, every time you get out. Sometimes you get paid for the lesson that you learn. Sometimes the market charges you. So particularly when the market charges you, you better sit down and learn the lesson, or you're going to make it over and over and over again. It is the nature of the human. Absolutely. 100%. Anne-Marie, help me with my understanding of price action and momentum. Okay. Momentum is, I'll move it in terms of cars. So let's say price action is moving up. That's you in a car headed up a hill on cruise control, or you in a car heading down a hill, cruise control. That means you have steady speed, but you're going someplace, right? That's relative trend. Price action and trend, very closely related. Momentum is the speed of price. So if we turn that into the car analogy, it's you going up a hill, but you're accelerating the whole way up the hill. Or you going down a hill and you're accelerating going down the hill. Your speed is increasing as you are moving. That's the difference between price and momentum. Price action is simply, am I in a range? Am I trending higher? Am I trending lower? Only 3 things. And most of the time, we range and then we trend higher, and then we range, maybe we trend lower, and then we range and maybe we trend higher, and then we range and maybe we trend lower. That's all it is. We go from ranges to trending, right? And so fancy pants folks will say inventory accumulation. That's ranging, right? So when something is in a range, that's you in the car, but you're not moving. Literally, the engine's on, but you're not moving. That's what a range is. Point A to point B, you know, maybe you're sitting in the garage and hopefully the garage door is up. Sorry, I have a morbid sense of humor. Please forgive me. Okay, so let's say you're seeing that. Just remember, range breaks cause traders to act. The range break makes them go, oh crud, they're leaving without me. I better move. Right? And so that's really all it is. You just got to look at it super simply. So for instance, let's say you're staring down this trade in gold. And you know, I don't like looking at smaller time frames in large part. So my thought is, it's the candle that you're in and 2 candles to the left. If trend is down, see, low, lower low, lower low, lower low, high, lower high, lower high, lower high. It's moving down. So no matter what, when you come into the next candle, you can go 2 candles to the left in the hourly formations, and you can go, you know what? That is the base of that candle. I'm going to go short right here at 33.38. And I'm going to have my stop just above the high of this candlestick. So that's 341. I've 3 points of risk. Okay? 3 points of risk. So if I'm staring that down, as soon as the market opens, I've already made this choice to go, listen, 2 candles to the left, I'm taking a short. Now, this candle's in motion, I'm going to think to myself, all right, as long as it makes a new low, coming back up here to a lower high, that's going to give me a great shot at a short. If you look at this and you go, well, it's not breaking the low, then you can say, okay, if it does break the low, guess what I'm going to do here? I am going to sell stop. If it hits lower than that, see you later. It's down. It's going down. Why? Because near-term past helps me predict near-term future. I can't tell what's going to happen 3 months from now, but I certainly can tell you if I break the low here, I'm probably heading lower, right? Especially since my momentum is just in the floorboard. Now, it could be that I only get, 2 points out of that, right? Truly, I could only get maybe 4 points out of that, right? Maybe that's all it gives me. Or maybe it ends up giving me 20 points. I don't know. But what I do know is that sitting in this space with this trend in this way tells me that if I lose this low, could it be a liquidity sweep that comes in, breaks lower, and then turns right around? Yeah, absolutely. And so maybe I ought to move my target up just a little bit for the sake of tilling that space. But that really is all trend and price action and momentum. What VWAP do I have on? Last week, okay, what VWAP do you have on? Last week, Monday, a VWAP on high volume, and today's VWAP is on Fridays, right? I don't know if I came in, was I on Lunchbox? I don't remember. Probably not. I probably wasn't there. But I normally have a regular VWAP, and then I anchor the VWAP on the highest volume of the last 3 days. It's been the prior day ever since through the week because the volume has increased all week, but I always go to the open, high, low, close divided by 4, and I show that area, and I just mark it off, and I know, hey, listen, if the traders get above there, that's what I'm going to do, and I'm in good shape. Price auctions have a highest win rate than any indicator. Depends. Maybe that's true, maybe that's not. I don't know. It depends. All right. Any last questions? Yes, ranging is price trying to get out of the parking lot. Absolutely love it. Coach Jay, this is a question for you. That would be a good stat. All right, that's listen, I love you guys. I can't even tell you how much I love trading, how much I love talking about trading, how much I love watching people trade well. I love getting enthusiastic about people's wins, and I I really love being support for them when things are tough because I tell you, way back in the day when I started, you didn't have any friends. Trading friends were not common because if you knew something, you kept it a secret. And we've gotten into a space where there's just a lot of sharing, and I do love it so much. It makes me very, very happy. So, on that note, my lovelies, it is 7 o'clock Eastern, and we are going to be getting ready for the very incredible slow markets with Coach Dakota, who is a rock star in his own right, just does a tremendous amount to help traders around. And then we've got Aaron at the London Open, and then Diana with Euro trades, and then it will be fast and furious tomorrow. Listen, manage your risk, wait for the trade, learn to sit on your hands. Don't be so active that you churn and burn. It's really okay to just wait it out and find your sweet spot and let it work for you. All right, everybody. I'll see you later. Thanks for visiting with me. Take care. Bye-bye.